Hello traders. So the markets are in a consolidation mode ahead of Powell's speech on Friday, but the underlying trend remains quite strong for the major global indices, in particular for European markets, which have benefited in recent times because of uncertainty lifting over tariffs, Germany's fiscal plans, and strong earnings. So let's have a look at a few major indices then, starting with the DAX. The DAX has been in consolidation mode ever since peaking in start of the summer at around 24,500, a psychologically important level. It has been consolidating around its 21-day exponential moving average, but as you can see, every time it's tested this 24,500 level, it has pulled back. But more recently, the selling has been mild from that level, suggesting that the German index is perhaps gearing up for a potential breakout soon. So zooming in to that area, we can see that there's interim support seen in the shaded green area between 23,950 to 24,165. This level was tested earlier today and we bounced slightly off of it. We have the 21-day exponential moving average coming into play as well. Following last week's breakout, the index has so far been consolidating inside what looks like a mini bull flag pattern, if I can draw it on the chart for you. Once, if and when the index breaks the resistance trend of this, then the idea is that it may push to retest that level and break it this time. Who knows? But the fundamentals remain positive for German and European markets, as I've discussed in the report, and the link of it is provided in this video. So if you're more interested, please have a look into that. But it looks like the German index is potentially gearing up for a move towards 25,000 next, which is the next big psychologically important level. The bullish bias would only turn bearish if and when the chart tells us, and for that we'll need to see the breakdown of some key support levels and a lower low. So far that hasn't been the case. Doesn't mean it can't happen, but if and when it does happen, then at that point we'll drop our bullish view on this market. Now, among the major US indices that look interesting for me is the small caps Russell 2000. That's looking quite interesting because it hasn't really broken to new highs yet, but it may do so soon given the underlying bullish price action on the market. So last week we saw a clean breakout above this bearish trend line or consolidation pattern, whatever you want to call it. The big breakout caused the index to rally to hit resistance at this area around 2,325, which was significant in the past, and once again it turned into resistance, strong resistance, causing the index to drop from there. But given the underlying bullish price structure that has been formed here, it could be gearing up for its next move to the upside, and support is being provided right now at around the 21-day exponential moving average, which is being tested at the time of recording. Below that we have the high from the previous resistance zone, which gave way during this breakout. That level comes in at 2,247, which makes it an important support level to watch. Below that, the base of the breakout comes in at around 20,220, and then it's this area that I've shaded in blue on the chart at around 2,185, which is going to be very important should we get there. But the path of least resistance is to the upside, and we could well see a clean move higher in the coming days. Now then, the Dow Jones has found strong resistance once again at around that 45,000 level, as it did in 2024, December 2024, and again January of this year, and a few more times in recent months. More recently, last week we tried to stage a breakout above it, but that failed, causing the formation of a hammer-like candle, which has drawn some attention from traders. But the lack of downside follow-through so far suggests that the trend is still bullish and that this could well turn out to be another trap for the bears. So watch out for a potential breakout. And for me, the signal could be if we climb out of this mini bull flag pattern to the upside. So A daily close above 45,000 could be huge. It could pave the way for more all-time highs, but the initial target will be the all-time high that was hit last week at 45,283. Support levels to watch include the 21-day exponential moving average, which has been tested. Below that, we have 44,300, the base of the breakout from the previous range. Below that is the low that was formed prior to the breakout at 43,933. Now, if that level breaks, then in that case, we could see a more significant correction than we have seen so far. So for me, that's the line in the sand. Even so, the downside could be limited given a positive backdrop for global and US equity markets. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.